Hi, this is Elliot Wave Sage. Want to go ahead and do a quick market update. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. I'll just kind of go through everything, starting with the Dow Jones. So 4-hour view, again, looking for a 1-2, 1-2, 1-2. We haven't really seen that separation. You can even make an argument we're in some kind of a bull flag in the Dow Jones right now. Here's your flag pole, and then this is your flag. Let's see how we do if we can break out. Break out of this, pattern, and see where we go with it. We had this little false breakout. We got nailed back down. So perhaps we could come back up and come down and out like that. So there's a couple of possibilities, or we could just proceed higher from here. So you're like, what would cause the market to be so bullish? And I was trying to, rack my brain around what could it be, what scenario. And I was thinking because, here's a plausible scenario. And again, this may not be it. What if, the Fed has a dual mandate, so they have to consider not just inflation but unemployment. Multiple times the Fed has mentioned in the last, I think in the last 2 or 3 monthly meetings, that they will consider unemployment in, exclusive of inflation. Like that is like, they can't have unemployment skyrocket quickly and say, oh no, inflation's not good. They're not going to do it. And he's mentioned that, and he's been asked questions about that. He brought that up again today. So he's really setting up the market. I think the market is underestimating that if the unemployment rate really drives higher, like we get surprised acceleration to the upside, we are going to get rate cuts like a lot sooner than people realize, no matter what the inflation rate is. No matter, and I don't think people understand that, but I think that scenario would allow them to lower rates like right now and not worry about inflation getting this perfect landing. So perhaps that's going to be the catalyst. Unemployment rate spikes, and that's what I think could happen. That could drive these rates lower and cause then of course that would be a recession fear, right? And so but you're like, why would the market go up in that? Well, it will, because he'll have to ease, because that's like I think their worst nightmare. They can't have running rate unemployment going into an election. So I think that's the only bullish scenario that I think could create a bigger move higher, um, that I can think of. Now maybe there's the Japanese government is going to do some funky technical thing to support their currency, and that mechanically will cause the dollar to weaken against the yen, which weak dollars, everything goes up. So that's another scenario out there. China stimulus is always out there. So I just don't know. But for right now, we're just going to keep this count where it is. Now, we haven't taken out this high, so we have a 3-wave move. So it's not all clear in the Dow Jones, but it looks like we want to take this out. And once we do, then you've got either 5 waves up and we'll get a big pullback, or we'll just accelerate higher, or it could be like a 1-2, 1-2, and we accelerate. So we have to wait and see. So I won't even really label it for now. The SPY, we haven't taken out this peak, so we're still in a wave. We haven't seen wave 3 yet. We haven't seen wave 3. And therefore, we should expect that acceleration higher, like the Dow really hasn't seen that wave 3 either. So where's the SPY? The SPY seems to be gaining momentum to the upside, coming out of, again, some kind of bull flag. That should get us up to 580. So maybe now we'll get some separation and some acceleration up. Let's see what happens if we'll get follow through. If not, again, we could just chop around, and this too could drop. This too could drop. This would be the new connector. This would just drop. So we don't know. But I don't like to try to top tick this market. I mean, everyone is so scared. I mean, oh my God, everyone's scared of a crash and so nervous, and they're trying to short, and they have their reasons. Like logically, this makes no sense. The market doesn't deserve this. The multiples are too high. I'm just so smart, but the market doesn't care about that. It's not chess, it's poker. Oh, I see divergences. The market doesn't care about divergences. Divergences get erased. And if you watch me, numerous times we've seen that happen. So we don't give a shit about divergences, really. We don't trade on that. We look at that to help us understand account, but we don't. That's not our end all be all. Divergence is just one instrument in a big toolkit that we use, but it's not the key instrument. But it does help pinpoint waves for us. But I don't ever short a wave 5 divergence because the trend can always extend down and up. Same in a declining market and up. So the NASDAQ, I'm labeling it as I see it still a fifth wave. Let's take a look at the 4-hour. As you can see, we did take this peak out. Now, of course, we could accelerate and take this out, and probably more than likely that's what's going to happen to sync up with the other instruments, and then this would just become like another 1-2. Hold on one second here. Got it. Got the wrong one. There we go. So we could accelerate higher, and then this would become another 1-2. And boom, and again, cup, handle, distance, boom, 532. Here we come in a wave 3 of 3. Why would it do that? Why would the market do that? I know better. I'm so smart. It should not do that because the tech is already gone. It's too extended. All I heard on TV was all these super smart people paraded on CNBC to try to get you to sell your stock today. But look, it was up 1%. They're trying because they missed the move, guys. All those smart people, they're parading on TV, missed the move. They got out here. And they're like, shit, come back down. Oh, shit. And it's not coming back down. Some of them never got in. They're still down in here. Now, luckily, we got in down here. This is our, we got in way back in December. And we've stayed in the market, and we could continue to stay in. It's just that's what they're doing. They're scared, but they're not scared because they're going to lose all their money. They're scared because they're missing the move, and they need to get in, and they can't. The market is leaving them behind, and it could accelerate, like I showed you, and then there'll be the ones that are going to be forced to enter here, and that's who we're going to be selling to later. And we'll be laughing our ass off as the bear market starts. That could be a generational bear market, by the way. And then we'll laugh our ass off, and that's how this game is played. Now, bigger picture, as we accelerate through this, if we erase the weekly, monthly divergence, the 2017-18 divergence, then there ain't going to be no crash under, I guess, President Trump, right? President Trump, let's just say it. He's going to be president unless there's a Hail Mary play that the Democrats want to play. So here we are. IWM, a 1-2, 1-2, 1-2. This is super bullish. If this plays out, this is ready to just, boom, come up. Small caps will launch. If this plays out. Now, if this doesn't and breaks down, well, it could create a cascade of selling, and the two will probably come down to 192. That would be pretty bearish, and that could be devastating to the bullish case actually. So, but the bulls are trying to take control of this market. little by little by little, but now is the moment of truth. Because if you could take this peak out, then I think it will be a massive short squeeze in the small caps and the FOMO chase. So those are the indices, guys. And let's always go look at the GameStop. So GameStop had a little shakeout because Roaring Kitty, I guess the rumor is he left GameStop to buy Chewy. Again, we don't care about the news. Elliott Wave Sage does not care about news. I don't care what Roaring Kitty does. You know, F Roaring Kitty. I don't care what he does. I just care about the chart. So what happened when that happened? What did I do? What was I doing? My mentality. So I go to the 4 hour. I'm like, what's going on here? All right, the 4 hour, we come up, boom, we erase divergence. Okay, that's cool. We erase divergence. Now, we have a connector here, or it could be a triple. I don't know what it is. You know, on the 45-minute, it still looks like a connector here. And then, boom, erase divergence. So I'm labeling it as a triple. It's a little more elegant, but it doesn't have to be. It could still be just a WX with a very truncated Y wave. But I could care less what the labeling is. This is the corrective move. Now, what if it dives down again? Well, I'll do the same thing. And you go, well, why did I not worry too much here? The IWM also was supported. Boom, IWM hit the buy area. Guys, GME was weak because the IWM, bam, took a wave C dump. So of course GME took a dump. Boom. But as soon as the IWM hit the buy area, it bounced. And guess what? GME bounced. So this is, GME ain't going to crash if the IWM is going to moon. It's not going to happen, guys. This won't happen. Now, again, it may not pump as much as, you know, maybe the Warren Kitty factor's gone and won't go, but it's still, there's still a lot of shorts in here that will panic. But we're coming out as some kind of downtrend. I think, you know, people are like, oh, descendant triangle. Well, this is about to be negated. If the descendant triangle, and it's not ideal for descendant triangle pattern, but whatever. We'll see how this plays out in the next couple days. You know, I have it as a 1, 2. I could say 1, 2, 3, 4, 5. I could put the 1 here. We pull back to 2350 or even lower like it likes to do. I don't know. I'm just going to label it like I have it here for now. And we'll see if this this holds here. This box is irrelevant now. And that's it. Okay, let's just keep going. The Hang Seng is still not where I want it to be, but I said if it bounces here, it's just going to bring the connector up. So whatever. Bitcoin. Bitcoin looks like you had a 1, 2. Again, a perfect bounce in our buy area. Then we had another small buy area here in a 3-wave pullback, and we went vertical for a typical wave 3 action. Again, that's typical wave 3, and then we make an impulse, and now we have another impulse, and now we have another 3-wave move. Now we haven't hit the buy area yet. We were close. We've missed it by maybe 50 bucks. It could be over. This could be it. Now here you see you have 3. You don't really have that third, so I wouldn't be surprised to get one more dump down in here. But it's either very close to finishing or is finished here. At least this leg. We'll have to wait and see. And again, overlapping waves, so it's a 1, 2, 1, 2. And if this plays out, guys, and look, the long-term downtrend has been broken. So the odds are this low's in. If people are like, oh, it's just going to crash. Guys, this downtrend's broken. We had good reaction here. The market, look where the market is. I wouldn't be surprised if we just get a big pump wick, boom, we're at 68,000 and you missed a move. I wouldn't be surprised that. And then Bitcoin chops around. I wouldn't be surprised, guys. That could happen at any moment. You know, so then oil hit our target. I mentioned this triangle target. And then it definitely reversed hard there. Let's see if that's important. Because if this breaks and we really break out, really we need to break 87.58. If we break 87.58, then the X is going to extend. And oil's going to 120, guys. And that's going to change some of our trade setups. I would want to be looking at energy a little closer. Could that be the hurricane factor coming in the Gulf? This Hurricane 5 coming in? If anyone remembers nat gas and oil prices during the year where Katrina and they had all those Cat 4s and 5s all went through the Gulf, man, those prices spiked all summer. You know, those prices frickin' spiked all summer. So maybe that's what we're in for. I don't know if it's going to be a bad season or not. But right now, this is the chart I'm going with. Silver, again, is in this flag pattern and looks like it's trying to come out of it. You know, we have 5 here. It looks like a 1-2 here, a 1-2 here, and it wants to just do that. You know, I'm not labeling that for now. Inverse head and shoulders looks like we're breaking out of it. It looks like it wants to come out of this flag. And gold is kind of the same thing, kind of hanging around, and looks like it wants to come out. And if the gold miners have bottomed, chances are gold has bottomed. Platinum's been doing really good. It actually made the turn first, and looks like you got 3, and we're trying to build out of this to a big push higher. Then the dollar index, guys, don't be, you know, traders are scared. Oh my God, the dollar index. Like, guys, look, the technicals held. It held. Everything's holding. And actually, really, the line in the sand is here. So it could even go out like every time it comes up here, boom, it sells. Here, boom, it sells. Here, sells. Here, sell. So I don't know. Maybe smart money's laddering in, shorting the dollar. I don't know. Now look at this pattern, guys. They look at this. I think they call this like a castle. Like you have a head and shoulders, and then boom, it breaks, and then you have a bigger head and shoulders, and boom, that breaks, and you have even a bigger one and bigger. So that usually creates crashes, guys. That type of pattern is usually indicative of massive moves, like if it plays out. So dollar, you know, this is why it's like, guys, if this pattern, this head of these heads and shoulders starts snapping and breaking, boom, 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 and then this thing breaks, it is like, dude, it's dollar index is 100 in a blink of an eye. And I'll tell you, gold, silver, Bitcoin, all that, and maybe even oil, we'll see. Moons, oil is a wild card, and that's why I'm not really trading oil. There is a short setup in oil. I don't recommend taking it. I just don't recommend taking it. I think you should just be on the sidelines in the energy market and just let that play out a little bit more. The 10-year is in a sell-off in rates here. We'll see if we get sellers. Now we're looking between the 2 and the 4. So perhaps maybe it can make a little bit more, a bigger, like another move higher potentially. The 20-year. Did push right where I would have expected, right in there. It's finding, you know, buyers of bonds or seller of rates, and then the 30 years in the area. So, you know, the bond market's trying to start its big move lower. VIX heading down again. My target was 1098 for this swing, and then we'll get some kind of bounce out of that probably, and then again, sideways for a while. So a lot of choppiness. You know, but below, I mean, look, we have a lot of consolidation, and I don't have these trend lines drawn perfectly, but once we get below that, I mean, we could even get that sell-off. This is the ultimate area I think eventually we'll tag. I thought we would tag it later, but we even get a sell-off and just drop down. So be careful hoping for volatility anytime soon. But my forecast is sideways, and then we get a bigger drop later. But what do I know? We'll see. I don't trade the VIX. I just kind of keep an eye on it, and we'll just do that. All right, guys, that's that, and let's go for some of the big cap tech stocks that I know you guys like. Or actually, yeah, let's go to big cap tech here. Let's go to big cap tech. Apple. Pushing higher in a wave 5 unless we take out some divergence on the 4-hour. It's going to try to do that. We'll see if it can do that. And again, wouldn't be surprised if that happens, but you'll have to do what's best for you. And again, we hit the buy area, boom, out. Amazon, we didn't get that dip, truncated, and it's moving higher in its 5, but then again, it could, no, we erased divergence, so it's entering a 3 of 3. to the upside as everyone FOMOs in. Okay, guys, Tesla, again, spiking the football on Tesla, guys. You know, we were calling Tesla buys here and here, and we were accumulating this right here. Like watch my video. We had this played that we called the inverse head and shoulders. We have the breakout. Now you're going to test the bear market downtrend line. You're about to test that. You break out of the bear market downtrend line, I don't recommend selling it. I don't recommend selling it because I think it's going to just go all clear to all-time highs. And then God knows what can happen with Tesla. You know, we've seen when it breaks out these consolidations, it moons. Like when we break out of big bear markets, it tends to just go vertical. Now, we obviously got to be careful, but you know, just something to keep an eye on. So don't get too you know, don't give up your gains too easily. Now, it is going to get tested here. I think this trend line will be a test of some kind. But I'd be surprised if we just go through it. But who knows? But I don't like selling Tesla. And of course, TSLL, guys, we are trading that. This took a lot of patience. We were in this, you know, somewhere in here. No, actually here on this third wave here. And we just had to hold through all this. And then they tried some little dip here. But again, we watched the divergence get erased. Just like in GameStop, we weren't tricked. We held it. And then, boom, we even got another opportunity here to get in. And again, watch my videos. And now it's vertical action. So where could this go? We're looking for chart horizontal resistance. So I'm thinking like 18, 20 is the first major area of resistance. And then, of course, 28. And then if we were to break 28, I'm looking at 50. So that's how I would see how that would play out. Over, you know, that's got to take a lot of time. But the bulls are taking control. Adobe's doing okay. Trying to erase divergence, but could be having a pullback here. It could be a wave 3, a wave, another wave 1, 2. Don't really care. AMD is again playing these little games here. We had this like big dump that I guess it really wanted to fill that gap for some reason. It technically held the low, so it was just a shakeout of day traders, and now we should continue higher. ARM, you know, are we going to get this pullback or not? It doesn't seem like we're going to get it. It seems like it may be over. And we get a 1, 2, 1, 2, and we're out. And if that's the case, NVIDIA is going to do that. So these dips in the semis aren't guaranteed. But I'm here, like this dip in NVIDIA isn't guaranteed. But I'm ready to buy it if it happens. But I won't want to buy it here. I don't want to buy it here. And again, the B could still come up, and we could get C later, you know. So I don't like trading it here. I just like trading my setups. Okay, guys, let's look at some of the other sectors. Healthcare, well, we'll go to, healthcare. Whoops, here, let's go to trade and view. So healthcare, what's going on today? Yeah, seeing some of the small caps move, a few here and there, but this is, I think, Cathie Wood stuff. And Cathie Wood is, I think, turning higher. All her stuff's about to turn higher. I don't like trading Novax and VAX. QSI, we'll see if we can get this turn in wave 3, get this breakout. I think it hit a buy area today. See if we can come out. mRNA, I don't like trading it anymore. This could very easily be a connector wave, and it's just too much momentum. Now, you know, I personally, if it's a connector wave, I would not want to trade it. I would not want to trade it because that opens you up for $40. So if it's a connector, so I have it labeled as a connector. And there was some movement in the GLP-1 space today because there was some op-ed that said that they need to reduce their drug prices or else from, I think, Biden and Bernie Sanders. Let's go to Lilly real quick and see how that, I think that took a dump to, let's see here, Lilly. So Lily is in Grand Supercycle warning watch and wave 5. It could be it could be it. Now I like that hammer candle, but uh, this could be the start of a bigger decline in Lily. Could it correct the Grand Supercycle? Uh, I mean, I'm out. I mean, if my count is right, that's it. It's over. It's game over for Lily. And where would it go to? It should come back down to 720, 680, or maybe even 650 over a many months. But again, who knows? Wave 5 could extend. This could become a 1-2 and just extend, and then erase divergence. So not we don't know yet, but I would just say it's possible. But clearly, this whole cycle's over with this little dip. So if we extend, this would just become a wave. It would just do that. It would do something like that. And wave 5 extends in a 5 of 5. Novo's the same thing. I don't have any more. I can't get another. It's it. It's over. But again, wave 5 can extend. This could be a 1-2 of 5, and so not enough price data to confirm that. But it's a warning sign, like maybe it's done for a while. If that's done, then the Viking more than likely will also bleed and fill this gap. I didn't think it would fill the gap with this bounce, but it could still do that. So I probably don't want to trade it under 46 if we come back after this kind of move that really corrected this whole impulse down this C leg, because then this could be a 1-2 and then it could be a bigger draw. So we'll have to wait and see where the GLP-1s are going to trade. And see here you didn't have divergence, so I think Viking, you got to be careful that it doesn't break down and try to come down to this 38 area. Just be careful if you're in it. So we'll see, but it depends on that sector, if the sector is going to peak out like it could be doing right now. Okay, let's take a look at some other stocks like discretionary. Let's look at, let's see, Nike. How's that? Still not where I want it to be. I don't like trading Starbucks until we get down to these lower areas. Yeah, nothing good there. Let's go to Staples. Celsius is trying to form a bottom for the C leg. If this extends, this could be a 1-2 and get a catastrophic drop. But I still think this could be tied to Pepsi's stock chart until Pepsi reaches its buy area. Monster, I want to see more downside for generational investment opportunity in this $40 area. Same thing with Pepsi. Pepsi, I want to see Pepsi head down to 140, 135 for your dividend investors. You know, this would be a great dividend investment opportunity here. Now, what I don't like about it is, there's one thing I don't like about this chart, is if it is correct in the grand super cycle, which it more than likely is, usually it retraces down to the 4, which is 99. So I think you still have to respect that you get something like this. So just be careful, like don't fall too much in love with it. But I do think this is a good area to buy it potentially. And when it gets there, we'll look at the RSIs and see. And again, if it bounces too soon, then the X just extends. The industrial space, let's take a look at industrials. I do like Cummins here. If Cummins wants to double correct, great opportunity at 243, 233. It was a bounce here, and it did bounce, but if this bounce fails, this would be a new area to buy it. And it looks like it did drop below that after hours here, and I'll have to deal with that later on my trading view. Let's go to commodities real quick. Let's take a look at some of these industrials. So again, massive fight between buyers and sellers here. Someone's going to win this battle here. Again, it's probably, if I'm taking the bearish interpretation of this chart, it's something like this. And then this is so this would actually come back up to 164 and then drop. Very different. Now, if we take out 167, the bearish cases negate it, because we would swing too far, So let's take a look at some of these others and see if we have any more like bullish energy that would cause us to change our minds. Again, 5 waves. This could come back up to 95, even 94, and then drop. XOM. Same thing. 1, 2, 3, 4, 5. XOM is already in the sell area. So maybe XOM will give us an early indicator if we're going to get this sell-off or not. It will either probably break this high first or break down first based on what I just saw. We'll see how it's trading. It did take a dump right where I would have expected it. Let's take a look at our Schlumbergers and Halliburtons. Yep, not where I want it. And OH, not where I want it. So still not ready to FOMO in. Bore Energy, still not where I want it. Let's look at RIG, the meme stock of energy, not where I want it. So I go through energy, guys, and I just can't get bearish energy. I just can't FOMO in energy. The technicals don't support that FOMO, but maybe soon they will. Soon they will. Let's look at some of these other commodity plays. Mosaic did hit our buy area. It could a nice bounce. We'll see if it can hold this level. We'll have to wait and see if this is over in Mosaic. 26, and if this is right, this would be a great entry with a stop at 26.56. Let's take a look at some divergences. So you have to go to the higher time frames. You know, I don't like it. I like to see a little bit more capitulation, so I still like to see more downside. Nutrien. This is a connector for this move. So really, Nutrien, it's kind of like has to hold this 47, and this little extra dip there would alarm me a little bit. So just yeah, I don't know. I think this is a dangerous chart right here if that breaks at 47. Let's go to our gold miners, right? Look, gold miners, guys, so far so good. We have a 3-wave move. We bottomed here. And then it could be a 1-2, 1-2 setup, ready for that wave 3. And again, if this does break down, we'll just have a bigger wave 2 drop with a new buy area, maybe down to 37. But for now, this will just keep this to count. How's Cleveland Cliffs doing? I'm trying to keep an eye on that in the background. Yeah, I don't want to trade that. Yeah, I don't want to trade that. The use. Be interested if this is a massive top-in structure and breaks. If this is a connector and this breaks, it'll go down as fast as it went up. It'll be interesting to see that if it can hold this level. I don't like how that bottomed. PLL is one that we've been trying. Look, guys, it hit the extreme area here that I have all the way down, and it did find a little bit of a bounce. You know, so now let's look at some divergences to see if we really got the capitulation we need on the higher time frames. Monthly is good. The weekly, you know, we had a really nice bounce here. The downtrend never broke. So, you know, it would be nice to have more follow through and break that. So again, I'm still not, even though it did, you know, it's so stretched, I'm still like, you know, I still like to see a little more downside here. But you'll have to do what's best for you on this. And then crypto stocks, you know, BCHG, looks like some kind of bull flag trying to, you know, finish some kind of consolidation here, right? It should break out at some point, we're hoping. That's what we're hoping for, right? And we break out. How's Coinbase doing? You know, really wants that final leg lower. It'll be interesting if we get it. If we don't, then the B is extending. So we'll have to wait and see. Mara broke out. I mentioned to watch this. We should see these higher areas or even higher potentially. MicroStrategy. Looks like to me we broke. So MicroStrategy looks like it may take a little bit lower, unless this is a flat and you put the A and an A, B, C. So it could be a flat. So actually, that could, you gotta be careful. It's not a flat connector with a 1, 2, 3, 4, 5 move down. Just be careful there. So that's where I've got the market, guys. I think for now, we're in an interesting moment because it's not all clear yet. Because obviously there's some news event that hasn't happened that is going to create a super bullish situation. And if it doesn't, and the dollar continues higher in rates, then yeah, the market and energy goes higher. Yeah, the market should break down, right? So we have to wait and see. But so far, you know, the bulls are still trying to keep control of this market. And, you know, I think the thing with crypto, because a lot of people trade that, you know, you look at this downtrend with this connector breaking. This is one cycle. You break this, it just doesn't seem likely that will just drop. Like, it seems like to me, to get a breakdown like that, to break these lows and this low, we would need the dollar. My guess is the dollar would have to surprise and boom, and just like break out of this pattern. If I choose to look at it this way and out, it would change the whole nature of the market, right? I think so. It's something that I think, and that's what I think would cause gold to take a meltdown, and silver would take a meltdown. So the market hasn't made that decision yet. It's kind of like treading water, and neither side is ready to give up. But the pot is getting bigger and bigger and bigger every day, because whenever this move happens, it's going to be a pretty big move. A pretty significant move. It may be even a historic move, and it could be historic to the upside. Just remember that. Just remember that. And the reason I mention that, guys, is if we are in a 3 of 3 of the grand super cycle on the indices and not a wave 5, typically 3s of 3s, you have your biggest percentage gains. Like, look what happens in Tesla, for example, right? But if you go back in the history of the indices, pick any one, usually the biggest percentage gains that I can find are usually off of bottoms. Show me one where the index was in 3 of 3 and it had a huge one-day percent gain. You don't see that because it hasn't happened, and maybe it's because the wave 3 hasn't happened, right? Maybe we'll see indices rise, you know, where there'll be, you know, a couple days in the record books in 24, 25 that also have the biggest gains in the indices, but it's not at coming off of a bottom, but it's actually in the middle of a wave 3 of 3. That's typical, right? Because most stocks, the biggest moves happen in 3 of 3s, or you know, or 3 of 3 of a crash, or 3 of 3 of a pump, or you know, or on a reversal. Like, you know, you hit your bottom, and then, you know, boom, everybody jumps in one side and it reverses. The biggest gains in the indices all come from like reversal situations. I haven't found one like 2017. There's nothing's in the record books there. 28, nothing. You know, those were wave 3s. You know, in the 90s, there's nothing there. I saw in the wave 3 of the 90s. You know, wave 3 of the 50s, early 60s, nothing there, right? The 20s, right before, nothing. So like, maybe it's because we haven't had wave 3 yet. Maybe that's it. Maybe 3 of 3 of the grand super cycle has just not happened. We haven't lived through it. And when we do, we're going to see, oh, wow, man, the market, SPY went up 5% today in a historic move higher. Oh my God, tech went up 8%. They circuit breakered it on the way up. It was out of control as people panicked into the market because they missed a move. Like, that's wave 3 of 3, guys. That's wave 3 of 3. So I'm just saying you got to keep an open mind about the market. You can't be thinking like the market used to be. You have to think about what it hasn't happened, because usually what hasn't happened usually is what turns out to be the case. So just think about that. It's something to think about. If this is a 3 of 3 breakout in the indices, if it's a wave 5 of a grand super cycle, then of course none of that's going to happen. We'll just peak out at 608 and trade sideways as we top with major volatility and then a massive crash. But if we don't get that and get acceleration, then my target of SPY 2,500 stands, and that's the way it goes. And it'll be a massive melt up. Be a lot of millionaires out there. So good luck. See you and talk to you guys later. And we'll see if we're gonna, like you said, market's at a big inflection point. Big move should be happening soon. All right, that's all I got.